Let's talk about taxes. For most of us, it is hands down the single biggest expense of our entire lives. But what if the tax code wasn't just this bill you had to pay? What if it was actually a map to building wealth? Well, that is the core idea from the book Tax-Free Wealth by Tom Wheelwright, and we're going to break down some of its key strategies right now.
So why get so focused on taxes? Honestly, it's because the stakes are incredibly high. For most people, this is the largest expense they will ever have. Ignoring tax strategy, well, it's like just willingly leaving a huge chunk of your potential wealth right there on the table.
Get this number in your head, 35%. The source material for this explainer says that's how much of their entire working life the average person can spend just to pay taxes. Just think about that for a second. More than a third of your career could be dedicated solely to funding the government. When you put it like that, understanding the rules of the game becomes absolutely non-negotiable, right?
So what is this big secret that the wealthy seem to know? The whole idea in tax-free wealth is about a complete and total shift in your perspective. You see, most people see the tax code as this super complex web of rules designed just to take their money. But what if? What if it's actually something else entirely?
Here's the fundamental difference. The average person sees taxes as a penalty, a punishment for earning money. But the wealthy, they see it as a system of incentives. They understand that the tax code isn't just a bill. It's a guide from the government telling them exactly what to do to get a reward.
And here's the crucial part. The government wants the economy to grow. It needs people like you and me to create jobs, provide housing, invest in energy. The tax code is its main tool for encouraging us to do those things. It's literally a map that says, hey, do this, and we'll give you a tax break. Following that map is the path to not just lower taxes, but to some serious wealth.
Okay, so that's the big mindset shift. But how do you actually put it into practice? What are the very first steps you can take to change your tax situation?
It all starts with two foundational moves. First, you have to understand that your tax bill is based on your actions. So to change your taxes, you first have to change what you do with your money. And second, and this is so critical, you don't do it alone. The book really insists on building a team, starting with a great tax advisor who is a strategist, not just someone who fills out forms for you.
Now, when we talk about tax strategy, there is one word that is more important than pretty much any other: deductions. This is the primary, totally legal tool for reducing the amount of income you actually pay tax on.
Let's make this super simple. The government doesn't tax your total income. It taxes your net income. And that's your income minus your deductions. A deduction is simply an expense that the government says, okay, you can subtract this. So the more legitimate deductions you have, the lower your taxable income becomes and the smaller your tax bill. It's really that straightforward.
So what kind of expenses does the government want you to have? Well, the biggest categories are things like business and real estate expenses, because those are the activities that create jobs and create housing. See how it works? Following the government's incentive map means focusing your financial energy in these key areas.
And in the world of deductions, there is one that is king. It's a concept that, honestly, sounds almost too good to be true, but it is a cornerstone of the tax code. It's called depreciation.
I want you to imagine something for a second. What if you could get a tax deduction for an expense you never actually paid? A write-off that reduces your income but didn't require any cash to leave your pocket. It sounds a little bit like financial magic, but that's exactly what depreciation lets you do.
So here's the basic idea. When you buy an income-producing asset, let's say a rental property, the tax code lets you deduct a portion of that building's cost every single year you own it. And here's the really wild part. You get to take this deduction even while the property itself is actually going up in value.
And the magic just gets better. You get to depreciate the entire cost of the asset, even the part you borrowed from the bank. This often creates something called a paper loss. So for example, even if your rental property made you $5,000 in cash, a big depreciation deduction could make it look like you lost $10,000 for tax purposes. You can then use that loss to cancel out taxable income from your day job. It is quite literally a deduction you don't have to pay for.
The author puts it perfectly. This isn't about finding sketchy, illegal loopholes. It's about using the powerful incentives the government has deliberately created for investors. In depreciation, it's one of the biggest ones out there. Look, we've really only just scratched the surface today. This whole mindset shift, understanding deductions, and the power of depreciation, they're foundational. But the book Tax-Free Wealth details over 20 different strategies that you can explore for your own situation.
So we'll leave you with this one final thought. Take a hard look at your own approach to your finances. Are you just trying to comply with the rules and pay whatever bill comes your way at the end of the year, or are you starting to see the tax code for what it really is, a map to guide your decisions and actively build your wealth? The difference between those two approaches? Well, it's everything.